Hey, Gesner, what do you think about those rates right now?
Oh, Mike. So rates are pretty much in a weird spot right now, right? So the Fed announced the rate cut a couple of days ago, actually Wednesday, right? And a lot of people under the assumption when the Fed cut rates, it impact mortgage rates, right? And that's not the case. So mortgage rates, they really follow the 10-year yield, right? So that's kind of like how we measure it. And right now, what we were seeing is rate kind of went up slightly from where they were before the announcement. So still a great area a great spot for rates to be in right now, right? Give people still a lot of opportunities. Affordability has improved quite a bit, which is what we're looking at when we talk about rates. It's all relative. But if we were to ask, hey, the Fed cut rates on Wednesday, we're looking at a lower rate today.
It
That's not
doesn't
the
happen.
case. Absolutely not.
So where do you think the rates should be around the first quarter to maybe even the second quarter of 26?
Man, Michael, listen, if I had a dollar for every time I'm asked this question, I'd be a multi-millionaire right now, right? But what I believe that's going to happen in the first quarter of next year is rates going to start coming down a little bit more from where they are right now. A lot of the pressure that we see on rate, I think most of that is kind of disappearing for us. So we expect rate to start coming down a little bit next year, and end of second quarter rather. We should see a lot less pressure on rate, which would give us an opportunity where we can see a lot of more buyers coming into the market. Right?
Yeah, definitely by the spring selling season, I agree with you. I think rates will
Yeah.
be, definitely more competitive, and I think there'll be much more opportunity for a buyer in this market. And we'll have to see what inventory is going to do. But I do think with rates going down, we could see some inventory, changes where people will be able to,
Stabilizing for
yeah,
sure.
definitely
Yeah.
stabilization. But I think more buyers, we need more listings. So I
We
think we'll
do.
see that.
Yeah.
We're seeing a low right now going into 2026. We do see listings pick up because people don't list during the holidays as
Right.
much. But I do see there'll be a lot more activity, and if that comes together when the spring season comes into play, we have a lot more buyers that are moving from out of the area here in South Florida. So I definitely see that we will see the trend.
Absolutely.
And I mean,
Yeah.
I'm hoping those rates, you get them down for me, I'll
Hey,
line up those buyers for you.
they call me the rate whisperer for a reason. So we'll make
Yeah.
sure we get it done.
You got to
Now,
tell me that. You got to give us that weight risk.
absolutely, yes, man. So one of the things I've been telling a lot of my realtor partners and clients right now is really the education part is very important, for a buyer and for a realtor, when we're in that process of buying a home. But right now is a sweet spot for us, right? So like between now or even November until January-ish, if you can find an opportunity right now, regardless of what the rates are, take that opportunity, buy that house, because once rates start coming down, what we're going to find is that you're going to have less homes available, right, which create competition.
Sure.
And of course, that adds pressure to home prices, right? So right now is a great time to buy, regardless of what rates are, because it still give you a chance to get into that home. And if you need to refinance later on, as rates start coming down, you have an opportunity to do that.
I definitely agree with you. People ask me, well, that's the other most asked question is,
Right.
when should I buy? Should I buy now? And
There
I
you
tell
go.
people, we can never predict the market, but we do have an opportunity for you still to get a great rate. You
Certainly.
can ask for concessions from sellers. You can maybe get a little bit better on price, and you could still have your dream home, possibly get a contingency if you need to sell to buy. So there's so many things that work in the buyer's favor right now. And I think the needle will change
Sure.
if rates get into those 5% range.
Absolutely. Yeah. And to your point, with all the seller incentive that you can get, there is a great program that we don't talk a lot about, right? Which is the 3-2-1 buy
Sure.
down, right? So buying it in this type of environment where prices are still relatively lower than they were, say, a year ago, right? Now, if you were able to get in and get some incentive from a seller, let's say you're at 6.25 right now. Well, the 3-2-1 buy down, what it does, it allows that rate at 6.25%. You drop that by 3 points, right?
Sure.
Or 3%.
For the first-
3% for the first
year.
year, then 2% the second year, and 1% the third year. So if rates start coming down, say next year, well, you can refinance into a permanent interest rate, right? And then that money that's set aside for the buy down, you don't lose that. You still can use that towards rather closing costs or whatever you want, or at least a principal reduction when you do that. So it's a great way to still get in and still take advantage of a lower rate in a year or so from now.
Another big thing I think people's misconception is, and I do this a lot on our presentations, and I speak to sellers, and they're kind of taken back because, banks are in the business to loan money.
Yeah.
So they're on every corner, like every drugstore.
Right.
So I say, if they're not lending, they ain't making money. And that's a problem if they're not lending. So we're going to see more lending opportunities. But to really put in proper perspective, a lot of these buyers want these 30-year fixed mortgages. We even had the president talking about 50-year mortgages.
Right.
So the crazy thing is, I always say, what's the life expectancy of a mortgage right now? You get a house, if people are moving, let's say, even 10 years plus, that's a third of the 30-year mortgage that they've taken. So I think a lot of people have that misconception that they probably won't live in that house for that 30 years. Hopefully they'll live and survive, but physically might not live
in that
there.
house. Absolutely.
So what do you think about when people ask you about the 30 years or trying to, maybe ask for an ARM instead and maybe get a little bit better rate or terms? What is the difference for a buyer in today's market if they are really looking for a better payment? They think rates will stay for the immediate future. What kind of program can you offer to kind of explain that the 30-year versus an ARM?
Right. So, I mean, one of the best way, obviously, to get a lower payment is what we just talked about earlier, the 3-2-1 buy down. Anytime that opportunity exists, we want to grab that. Right. So we can get that from either a builder or a seller, right? That can finance the 3-2-1 buy down. Now, in terms of, the 30-year mortgage versus an ARM, right? So on average, people stay in their home for about 7 years. It used to be 5 to 7 years. Now it's probably closer to 7 to 10 years because of obviously folks have a ton of equity in there and rates are a little bit higher. So that kind of keep people at bay. But for the most part, you're not going to stay in a house for 30 years, right? And even if you were to stay in a house for 30 years, you will refinance multiple times for multiple reasons, right?
The lifeline of a loan, either you're selling it, either you're refinancing it, or you're leaving and renting it. So there's so many different things that people will do to change the status of where they are with a loan. But I never see somebody, I don't know somebody, maybe my parents were the only people that kept their 30-year loan and they still paid it off like maybe 3 or 4 years before it was due. I remember they lived in the house for 30 plus years. Maybe they paid it off in 27, but they're the exception. I've been doing this for 23 years. You've been doing it for almost as long. How many people actually keep their 30-year mortgage?
One of the things that we're looking at right now that's happening is with debt, right? Like personal debt, credit card debt. So folks are leveraging the equity that they've built since COVID, right? To really rearrange their finances, right? So which is a great way to use and leverage your equity to reduce the burden, the overall expenses that you have on a monthly basis. We're saving people like $2,000, some cases $2,500-$2,600 a month.
It's crazy.
Right?
It's life-changing.
Life-changing, right? So to your point, as far as 7 versus or an ARM versus a 30-year fix, if you are at a certain age, a 30-year fix is definitely something that you want to look at, right? But if you are younger and you have maybe it's a growing family, perhaps in a few years you're going to have more kids, well, a 5 to 7, even a 10-year ARM might make sense for you as long as there is enough of a difference in the 30-year fix versus the ARM that benefits you. Let's say it's an extra $200 a month in savings, then absolutely you want to go that route, right? Because over say a year or 2 or 3 years, that saves you quite a bit of money.
10.
Or 10, right? Yeah. So that's when you would want to look at an ARM versus a 30-year fix. But so when I have conversation or consultation with my clients, we go through a range of questions, right? What is your long-term goal, right? Obviously we want to take the age into consideration to make sure that we're not putting someone that's, closer to retirement into a 5 or 7-1 ARM, right? At the end of the day, we provide the information, we educate them, and we obviously leave them to make the final decision. But yes, so I think an ARM is certainly a good loan product right now for folks who needs it because it gives you a lower payment. Quick disclaimer, the ARM rate right now in the 30-year fix, the difference in rate is not that much right now, right? So one may look at the ARM and say, well, that extra saving of $100 or $150 or even $200 may not be worth it for me, right? But the rate itself, it's not that far apart.
So when it changes, it could be something in the future that you want to look into.
Certainly.
There's a lot of people. But I think the buy downs and understanding it, it's if we still have appraisal values at a pretty high record number, and I've been seeing that a lot, and a seller's willing to give the concessions. I mean, we've raised the price of houses to give the concession, but in the end, a buyer should, they're not buying a house price of a house, they're buying a payment. I tell that to sellers all the time. They look at the taxes, what they could be next year, as they go up. They could look at HOA dues changing, insurance changes. So they're not really looking at the numbers of what the current owner's paying, but what they should be possibly paying. And lenders are supposed to, help give that with the real estate agent involved. And I think that's really where buyers are ascertaining that information to make informed decisions. So I think, People are buying payments, not houses.
That's exactly
and I
right.
really think that's what we should be focusing on in the real estate business is what's the best payment option.
Absolutely.
And within your new unique situation, you're a younger buyer, maybe you're not going to stay in this location as long. Maybe that would be better to have an ARM payment. If you're an older person and you want to have some stability and you don't want to have to worry about it, then yeah, 30 year. But I think that's really where buyers can take advantage of having their cake and eat it too right now by being able to get seller concessions, being able to get houses appraised at value, to be able to get inspection credits if they have anything. But I do believe that once the tide turns, and we go to a 5% or so interest rate, which could happen, maybe in a year, maybe in a year and a half, maybe even 2 years. But once we get to 5%, we'll have a line of people looking at houses.
Yeah, absolutely. I mean, that's the projection. So the projection is for us to be right around that 5.25, maybe 5.5 mark, perhaps towards the end of third quarter, right? Or beginning of fourth quarter next year. It's very likely that's the direction that we're going. Now, obviously, we don't know that for sure, right? But all of the markers are pointing to that, right? So the Fed, based on the last announcement they just made on Friday, it's very likely they will be open to more cuts next year, right? So we're certainly looking forward to that.
Well, I'm going to finish with my final question is the Fed is going to make cuts. I believe that it's publicly announced that the current Fed chairs, I think he's up in the spring.
I think April.
Somewhere in there by that time, right before the sellers, the spring selling season. Yeah. I heard that the administration is going to either this month or next put into play who the next Fed chair will be. And we look at Fed chairs not supposed to have the political influence, but let's be realistic. I don't think the person who's going to be hired is going to raise rates. Right. I think they're going to lower it. So I hate to step in the political arena here, but I do believe that a new Fed chair with a current administrator that's looking to lower rates, that can only look as a positive if you're looking to buy property. So I think by the spring of next year, you could already see this new Fed chair to be already speaking. Absolutely. And I think, as you said, it's based on speculation where those rates go. And when the Fed announced the change in rates, it actually made the rates go up, right? It went up. Right. So this reaction of a new Fed chair,
I think that would have the opposite direction, effect for sure,
so
right?
We could be in that 5%. I believe if you get to even the mid to high fives, it was last year in 2024, I think we for 1 day or 2 days, we got just under 6%. Right. And I saw there was a 30% increase
in this year too.
Buyer activity for mortgage loans applications. I do remember that. Right. So if that's correct, we don't even need to hit much more than another couple drops to get to that mark where people might not be lined around the corner of a house, 50 to 100 people like we did during COVID. Right. But I do see the buyer activity will increase because as buyers see more of a value of they're going to pay a little bit more than a rental value for a property right now, monthly payment, that's where buyers will flourish.
And that's what buyers are comparing buying versus renting, too, right? So, okay, how much is it costing me to rent right now versus ownership, right?
Once you merge that gap, Gesner, I will tell you, people are smart with their money. They're very careful right now. We see a very tightness in people's willingness to spend money. They're careful, they're cautious, but if they see that amount, and we've seen where the borrowing power has increased. Right. I do feel once you get where people are going to see hundreds, if not thousands of dollars in savings in some of our South Florida communities that we're selling, because obviously the median sales price has gone up so much. I definitely will see where people want to live the American dream lifestyle, and getting a loan is very important to them. So it's really advisable for our clients and people watching to have their homework done first, to start working on getting their credit the best, to start asking the right questions, to start
comes into play.
saving their money. Absolutely. And really getting ready for this. Because you're right. If you wait till rates get 5.5% or less, you're going to spend way more money. You're not going to get the home of your dreams. You're going to continue to rent. And then it's going to be not cost effective to do that. Right. So I'm telling people, you can always refinance. And with these loan programs, you're not going to see a big change with fees. You're going to see a huge change in your monthly payment. And that's what buyers desire. Certainly. I learned it through COVID, seeing that buyers were flocking. Why were they flocking? They weren't flocking that the prices kept going up. They were flocking because those payments were going down.
That's right.
So
rates were much lower. I mean, to your point earlier, I think when you start moving in that market, like it's a buyer's market right now, obviously, once we start shifting where the balance starts shifting more towards sellers, then if that's when you're getting in, at least, getting pre-approved, which you should do right now.
Correct.
Right? If you're planning on buying next year, you need to get pre-approved right away. And start learning what the do's and don'ts are in terms of the home buying process, right? So it's good to have a loan officer that can educate you through the
100%.
process, let you know what your options are, understand your buying power, right? And so you can stay within your limit, right? Because if you're doing that next year and you have 100 people competing for the same house, you're in trouble. So one of the beautiful things that we do here with Nest Lending Group, powered by Revolution Mortgage, is we prep our buyers before this, before we even give you a pre-approval letter. We'll give you a pre-approval letter. We put that with a loan commitment, right? By the time you get out there, you are treated like a cash buyer.
Correct.
Because by that time, we already know what your finances look like. We know what the credit looks like. And you already been underwritten by an underwriter, right? So by the time you take a client out to shop for a home, it's guaranteed money, just about.
And we've
right?
seen it where buyers that have worked with the Nest Lending Group at Revolution Mortgage, they've been able to win houses.
Absolutely.
Sellers are loving that you're able to make it a cash offer, and you're still protected within the time frame
Right.
to make sure through the inspection that everything's done. So you're not going into something without being fully protected. So that's actually been very beneficial because buyers want to have buyer powers. And as we even shift to more of a seller's market, if rates and when rates go down, I still think that will make you stand out. Because during COVID, cash was king. Let's say that. We have a lot of cash deals in South Florida, but we also had a lot of buyers that were waiving a lot of contingency. So the better offer, the better presentation. I always say presentation is everything. And having a good lender contact that listing agent, having a good lender being involved in the process to walk the buyer through, but really being that lifeline of the home. I always say once I put a house under contract, the mortgage lender is everything. They're right. the heartbeat of the sale, of the purchase. So I do believe that it's important that buyers are purchasing today and they want to get to that next tier. Right. So if we see rates go down, you might actually, with affordability and more competition, you might kick your tier down. So if you're looking for a 5-bedroom and the rate changes, you might be getting a 4-bedroom.
Absolutely.
So, or you want the pool and the rate goes down, there's more competition, you might not get the pool.
Absolutely.
So we used to say there was, must-haves.
Right.
Everybody has their 5 must-haves as a buyer. So, in this market, you might be able to get 3 or 4 of your 5 must-haves, maybe even 5.
Right.
But during COVID, you were lucky to get 1. I used to say, people would ask us and say, "What? I want a deal on the house." I used to say, "The deal's the house. Like the deal's getting the house.
Right.
It's winning it among all the other competing places." So
having your offer looked at, that's the winning. But so to that end, right? So what we want to do is help clients win deals all the time, right? Not sometime, all the time. So we have a 12-day closing strategy that we use, right? Where from the moment you go under contract, we can close that loan in about 12 days, right? And the way we were able to do that is by what I mentioned earlier, where we can do the loan commitment up front and get all of those conditions out of the way, give you that loan commitment, give you that pre-approval, so you are out there as a cash buyer. So once we have that contract back, the process just go very smoothly, right? Within 12 days.
And the seller's perception. Like maybe there's a HOA or maybe there's liens, but the seller's perception is it's under contract. This is the best buyer. And you calling the listing agent, you being, involved in giving the perfect presentation with the agent, offer package. Like I really feel like during COVID, we would get 15 to 30 offers on houses. Right. And I just looked at the best offer because the lender had everything together. They were calling and texting me and providing me, like, go with our loan, go with us. It's like cash. It's great. Cash, and some of the ones that we did, I was like, I went with this guy because he bothered me. He gave me the greatest marketing presentation and my seller wanted the fastest way to closing. And if that lender was giving almost a cash opportunity, it was a home run for all parties. And I know we're not in that market, but I do believe as things shift and we're still in one of the most desirable locations to live in. I don't think that's ever going to change. Right. You got to have your ducks in a row as a buyer. And I really think, early preparation and also having preparation in the sense of getting all of your credit run, but then being able to go look at houses. And I think pulling the trigger earlier than later is something you should do. I think if our audience is getting anything from this, is that time is of the essence, but I do believe time is money. And if you're buying now, you're definitely going to have to take advantage of it, because you can have your cake and eat it too. Because if rates do go down, you can refinance it, but you can't refinance something you don't have.
You don't have.
So
correct.
definitely, I'm telling you, I used to go to my open houses and I would see a line of 50 people in those things, and I go in and start asking questions. Where are you? Oh yeah, we're just barely able to afford this house, or we haven't listed our house yet, and we have to get the money from our sale of our listing to this. And I was just like, all these people in line, where are the real people? And I'd find the 5 or 6 that were really good buyers. And I just did my thing for my sellers. But on the buyer side, you want to be that buyer.
Absolutely,
You want to be able to win the house, having the best preparation, the best lending. Everything's so competitive in the business for both the real estate side and mortgage. We need to elevate our credibility, offer the best services, go above and beyond for our clients. I mean, I've been doing this for over 20 years. You have too. That's the connection that people make.
That's all we have, right? It's how we connect with a client and what exactly are we offering, right?
We're offering us.
There you go.
You're offering the expertise, the advice. I always say you buy a house with your heart and you back it up with your head. Now, understand, I want them to love the house, but I want to make a smart decision. And the smart decision is I can help them, but I need the help of a lender to give them the financial help. And sometimes a financial advisor or accountant needs to jump in there to get you some of those tax returns and things. But I do believe, buying a house smart is the way. And look, we don't make money if we don't sell houses, but banks are on every corner of every street in America, like a pharmacy. And if they're doing it, they are only in business to lend. So they want to give money. It's our job to get the best programs, the best houses, the best advice. And I think our reputation, speaks so loudly in our local market. And that's why I think these type of conversations and putting this out to the public and making them understand it's not just a sale for us, it's not just a transaction, it's the start of a long-term relationship. Because as I said, a lot of these people are going to need the advice to refinance in the future. A lot of them are going to need the advice what they should do in homeowners insurance in the future. And that's what a real estate agent and a mortgage professional like yourself can do for a client. It's a lifetime.
You have to be a resource, right? So you have to be the connector in a way, right? That even though if it's not your field of expertise, you have to have the experts that you can, hey, I can point you to this person or that person to get that job done, right? So that's why, like something that you do very well with Paired Realty is, hey, do you need a roofer? Do you need someone to help you with plumbing? With plumbing, you name it, right? So you have those folks, on deck where you can reach out to them and connect your clients with them. So one of the things that we did last year, we have a newsletter that goes out, right? And in that newsletter is what we do. We provide our past clients with different resources, right? Whether that's a roofer, a plumber, electrician, you name it. That way when they think of any of those jobs, they don't just think of reaching out to someone locally, but they reach out to me, right? Hey, do you have someone that can help me out? And which is what you guys do here very well.
It's so important to have your pulse on the market, but also the pulse on good people. Because let's face it, South Florida, some of the negatives are they're not great contractors out there. People are, not the best in service and what they offer. So I think, when we offer those people the same list, we do the same thing. It's a great idea. Realtors and mortgage professionals should be doing that, and we can help them, and you can as well. But I think being able to have access to good quality contractors, because those contractors want us to refer their business. So I'm not going to refer somebody that's not done a lot of deals for us, because I look at it like if I'm referring you that person, I would give it to my own family.
For sure.
So I think that's important.
So
So
I'll use it myself.
correct.
Yeah.
Myself, my wife. I mean, I have a handyman. Sometimes he can't come over to my house because I have him at so many of everybody else's house, including yours sometimes.
Yeah, absolutely.
But I do think that having this advice and speaking and doing these questions, I mean, we could talk for hours.
Absolutely.
But in the end, it's about providing the best advice. Realtors need to learn this. This interview, this little podcast we're doing, like when agents hear this, it resonates. I think for clients it should, and buyers, but for agents that are sitting there trying to separate themselves from the flock, what are they going to do? Like, this is the ability to get in a deal, to get a $20,000, $30,000, $40,000 commission, because they're providing a wealth of knowledge and they're actually using what they have in all of these, preferred partners. And I learned it, over the course of 20 years that you're only good as your team. And
network.
it's
Absolutely.
an army. And I really look at it like I'm heading it. I'm your guy. I'm your contact. But I can't do this alone. I can't provide this wealth of knowledge and access to all these great people, including the mortgage professionals and title and, inspectors and whatnot, without really knowing that it's a cohesive unit of people that understand our culture, how we work with clients, and how we expect that they should provide the same service that we do. And I think that's the change in real estate. It's easy to get in real estate, way easy to get out of real estate.
Absolutely.
81% of people stop doing real estate in their first year. I want to work with the best. And I think that's the case.
And look, we can work with people that are good enough or great. But really what you're saying is we want to work with the elite, right?
Correct.
So we want to make sure the service that we provide is an elite service, right? That our clients, when they hear the name, rather if it's Gesner or Michael, okay, these guys are they're the real deal, right?
It's an extension of you and me.
Absolutely.
And that's when I say when we have a contractor that maybe is not, maybe they're too busy or something. I just say, look, you got to give the best service because if I'm giving 110%, you got to give 110%.
Absolutely.
And that's it. So I think this idea of having all these questions and we go back and forth, in the end, it's really about being so knowledgeable that when anybody comes with any sort of question or challenge in the mortgage business, in the real estate business, I think we have the ability to exceed their expectations, elevate what our credibility is. I'm always learning. I'm always changing. The industry changes, but we're staying ahead of it. Our pulse is always on it. And I think that's what separates success overall. If you're a real estate agent, a business owner, you just got to always work hard and elevate to get better. And I think that's what we're doing here.
You have to be able to guide folks through, this very challenging process of, buying a home or financing a home, or helping them understand the type of home that's going to fit their needs. So absolutely. Listen, this is a great segment. I love it.
First of many, man.
Yeah, there's a question you asked me earlier before we got on the air, and I'll go right into that. I don't know if you want to ask me that question again about someone that did somehow have income or something like that. Can you help me understand that question?
So, Gesner, if I have a client, we do get this a lot here in the local area. They have no income, but they have assets, say $1.05 million. I mean, they don't have the right income.
Sure.
What loan programs are lending professionals offering to be able to even lend in this market?
Well, let's speak more specifically with with Revolution, with the Nest Lending Group, right? The client that has a large amount of assets, right? Rather that's a savings account, retirement account, you name it, right? And especially in our area here, we see that quite a lot. In fact, I just helped a client out that it's a husband and wife, where the husband has about $1.2 million in retirement in savings, and the wife has about another $700,000, right? So close to $2 million between the two of them, but no income. They both just recently retired, right?
Good
and they're
for
looking
them.
at buying a house for it's a house in Parkland Golf and Country Club for about $1 million, right? So what we're able to do, we look at their situation and say, well, we can use the asset. We have a program called asset depletion.
Yep.
We take the asset that they have over the years. I mean, there's some math that we got to do in there to see what's a usable asset, right? So we use that as income, right? So we take that $1 million or $2 million that they have, we break it over a certain period of time, and that's their income. So they went from zero income to about $32,000 in income and qualify for the loan with no problem. In fact, they're closing in about 2 weeks now.
That's awesome.
Yeah.
Yeah. So there's different opportunities. I think people's perception isn't reality so much in mortgage
not,
business.
right.
In real estate, I say it all the time. Perception isn't reality. What you
Right.
see on there might not be what reality is. But I do feel like knowledge, education, and just having great conversations
Absolutely,
in the real estate business, I just think it separates, the great agents from the ones that are part-timers. I mean, I always say 10% of the business is done by 90% of the business is done by 10% of the agents.
For sure. I think it's important for agents to have some expertise in the land of in lending, right? And part of the reason, not for them to be lenders, but if you understand the products and the programs that are available, you'll be able to win more deals. And truly, you setting yourself up to be an authority, right? When you speak to a client, which build trust, right? So this particular example that I just gave you, that agent was able to win that deal, and who knows what else he's going to get from that client, because he was able to help him connect with a lender that understand the process, understand the products that's available, and they were able to get into a home.
Yes, knowledge is power, man.
Knowledge is power.
Well, this has been great. We could talk all night, my
That's
friend.
true, yes.
But we'll get going on providing the best advice, and we'll do this on an often basis.
Certainly.
And everything that the world hits us, we'll come back firing
We
hard.
will, but so this will be something that we provide to the
Sure.
public. Hopefully, if it's not on a weekly basis, at least on a monthly basis,
Absolutely.
we can educate people and
We'll
kinda,
jump on and talk whenever
For
something crazy happens.
Absolutely.
We're ready. We're geared up for whatever the world's going to throw at us. Lending, business, whatever, politics.
name it.
We're just trying to get our clients the
Yeah.
best deals.
We're gonna dive into a type of subject, man.
Yeah.
So hopefully the folks who are watching, they get a ton of good information from this.
I
that they
can't
can
wait to
use.
get it going.
Yeah.
So pleasure to work with you, man.
Pleasure's all mine.